What's going on, traders? Welcome back to another weekly stock talk. Welcome back to another Money Monday. Last week, the Fed has done it again. We have gotten interest rates raised again by 25 basis points. If you guys have been paying attention, you guys know that that didn't have a very good effect on the market. And that was actually this period right here. These three red drops that we saw right after the Fed announced that they were raising rates 25 basis points. Now, you might be wondering, if they raise 25 basis points, what does that mean? In essence, that basically means that they think that they do not have inflation under control, especially when you're seeing banks collapsing and shutting down and being taken over and failing, and you have the Fed raising rates. That should tell you something. So today what we'll do is we'll talk about the NASDAQ market. It correlates very similarly to the SPY, which is the S&P 500. So us going over the NASDAQ should reflect very similarly on what the SPY is doing as well. So go ahead and pay attention to that. Let me know, is the Fed done raising rates? Was this the last time, or are they going to raise rates more? And then what else we're going to talk about is we're going to be talking about the key economic data that's going to be released this week, kind of what had an effect on the market doing what it's been doing, and what we should be expecting with the CPI report being released this week and the PPI report being released this week, and what traders and investors are expecting. So we got the economic calendar here on the right. We've got the chart here on the left. We're going to jump into the chart first. We're going to talk about what's been happening. We're going to talk about some key levels to pay attention to, and we're going to talk about a couple if-then scenarios, because that's in essence kind of what our job should be, is preparing, right? And taking advantage when we do see our plan panning out, right? We don't want to be predicting because we don't know the data, right? Until the data is released. So us trying to predict what's going to happen more often than not results in people and traders losing money versus making money. So that's why we're preparing. We're giving you the information. And then when you do with that information is up to you. So as you guys can see, let's go ahead and get a drawing tool. Last week, we had the Fed announce the interest rate hike. We saw the market drop. And last week on Monday, we actually talked about this scenario panning out. If you guys watched last week's video, you guys know that we were talking about this point right here on Monday, where we just barely broke out of this consolidation window that we've been in. And what we said is we want to see a confirmation. We want to see us hold this resistance and continue higher for us to justify a long position or a position in TQQQ. But we didn't see that, and we actually saw the Fed announce a 25 basis points rate hike, and we saw the market come down. And we were saying that if we don't hold this, we're probably going to be coming down to the support level. And if we break through the support level, that next level down would be this level. So we didn't quite make it all the way down to the bottom, but we did come down to this first level of support. This general area, we didn't quite make it all the way down, but that is just an idea, a zone for you guys to pay attention to. We came down, we found support, and if it wasn't for the Apple earnings that we saw on Friday, we'd probably see either a strong test of this level or even a potential break and a test of this 50-day simple moving average. However, on Friday, as you guys know, if you guys have been paying attention, you guys saw that earnings came in better than expected. Apple did really well, and we ended up seeing the market pushing up, which happened here on Friday. Today, if we jump into a closer time frame or closer frequency, you guys are going to see we did progress a little bit to the upside, but it was mostly chop. And it wasn't really the best day, the most prime day to be trading, at least not the NASDAQ market. So we pretty much stayed cash today. We didn't trade as far as taking a long or a short position, just because I think everybody's really waiting for Wednesday and Thursday, which are the two big days, which is Wednesday, we have the CPI report, and Thursday, we have the PPI report. And we also have quite a bit of Fed speakers speaking this week, just to clarify kind of the general situation. So I think a lot of people are anticipating Wednesday, and kind of see what happens then and then go from there. So I do anticipate tomorrow is probably going to be a very similar day to today. But I do want to note a couple of technical things for you guys to pay attention to. The first is the RSI and the price action, right? So if you guys pay attention to this white line right here, you guys are going to see that we have been trending up in terms of this trend line, right? With price action, we've been trending to the upside. On the RSI, though, we have been trending to the downside. So what that indicates is actually a bearish divergence, right? And what a bearish divergence means is that price action is becoming more and more exhausted, which indicates that there's weakness in the price action to the upside, right? Another thing is we are more so on the overbought side than the oversold side. We are sitting around 60 right now. 70 is where we become officially overbought, but we are more so on the overbought side than the oversold side. So looking into a long position right now when we are so close to being overbought, and with this bearish divergence that we're seeing, and with the CPI report coming out, and with the PPI report coming out, and with the Fed just now raising rates once again, along with banks failing, I think a long position wouldn't be my first choice. Let's just put it that way. So that's kind of my take on the overall big picture. We are looking at the daily chart, so keep that in mind. We're going to take a look at a closer picture, and that's kind of going to confirm to us why a bearish position would probably be making more sense to take advantage of. So jumping into a 4-hour chart, we're going to take a look at, it's a very similar situation in terms of, we got rejected at the same level that we got rejected last week. And so we're pretty much at that same exact level right now. So that's the first thing that we're looking at right now is that resistance level that we are seeing. And that is right over here, right? We saw this resistance be tested and then we got rejected. And then today, we're pretty much testing that same level of resistance, even though we are attempting to break out of this channel that we've been trading on and consolidating in. Well, we've seen that before, right? We've seen that right here where we try to dip below it, but we pushed right back up. So we're kind of seeing the similar thing happening here, but to the upside, right? Again, we have a CPI and PPI coming out, so don't forget about that. On the 4-hour chart, right, on the 4-hour frequency, we are even more overbought than oversold. Again, not something that I'd be looking to go into a long when we are starting to approach that overbought zone. That's when I'm going to be looking into more of a short position than a long position, right? And if it's going to take a couple days or maybe not, maybe it's going to happen tomorrow, right? I'd be prepared to take that short, right? Versus going into a long when we've already made a massive push. You don't really want to be jumping into something that's already becoming exhausted, right? Because you don't know where that top is, right? And even though, we do see this resistance zone, how high will it go? Is it going to go to that next resistance zone or not, right? So it's better to be preparing for the opposite action, right? And be ready for it than trying to chase something that you've already kind of missed the boat on. On top of that, we're looking at the MACD, right? MACD is starting to curve back down, right? Momentum, we're starting to see more convergence to the downside, right? Along with the bearish convergence. So we have a lot of confluences pointing towards the fact that we might not continue to see this bullish price action that we have been seeing. But again, it's really going to come down to how the CPI report comes out for the month of April, which happens on Wednesday, and the PPI that comes out on Thursday, right? If PPI and CPI come in hotter than expected, right, we're definitely going to probably see selling pressure coming into the market, and we're probably going to come down to test this first level of resistance at 313, which we got close to last week, but we didn't quite hit. And then if it's very, very high, we're probably going to start heading lower and break down to the downside. So 313 is that first level of resistance, at least for this week, that I'm going to be watching if we do have a hotter than expected CPI report come in. And we're going to be looking at SQQQ for that position. Now, if we do see a better than expected CPI report come in, meaning inflation is lower than expected, we're going to be looking at this next level of resistance right up here, which is 336.91. And these levels are created from previous price action history, right? So we've seen resistance at this level previously, and that is why we're using this as a resistance zone. Just like we have been using this consolidation channel, because it used to be a resistance up here and used to be a support right here, and we have seen just exactly that, right? So again, that's going to be the level to the upside is 337, 336.91, that general zone. And that is if we break above this previous resistance level that we're currently sitting at and testing. So tomorrow, I do, like I said, expect that we're going to see similar price action to what we saw today, because a lot of people are anticipating what's going to happen on Wednesday and Thursday. And that's really when we're going to see the most price action happen, is Wednesday and Thursday. So be prepared for that. We might see a little more, sideways action or a little more of a push to the upside like we saw today. Very minimal, not really worth the risk in my opinion. But Wednesday, once those numbers come out, we're either going to see a push up to the upside or we're going to see a push up down to the downside. So that's once we see the break to the upside, that's when you want to take a price. That's when you want to take a position in TQQQ, right? And if we break down to the downside until we hit this 313 zone, that's when you want to be joining SQQQ, right? Because the market's selling off. So that is pretty much a quick breakdown on what we kind of saw or seeing in the overall NASDAQ market. Looking at a 15-minute chart, like I said, we didn't really see too much price action happen today. We opened at about 322.35 and we closed at 323.45, right? So we saw very, very little margin that would be making sense to take advantage of, right? It's about 0.5%. So are you really going to try to jump into like a C setup, not an A++ setup? Probably not, right? I would personally want to wait for an A++ setup, which I believe we're going to see on Wednesday once we start seeing that CPI number come out. Once we see it come out, then we're going to see a reaction to that number, and that's when we're going to have a good setup to take advantage of. If you guys are on the team, you guys know that we do trade using the EMA strategy intraday, and that's obviously going to be what we're going to be applying on Wednesday and Thursday. Friday, we'll see how that goes. Might be a pretty slow day, but Wednesday and Thursday are definitely be hot days to pay attention to. So that's just a quick breakdown. Like I said, SPY is going to be reacting very similarly. So you guys can just transfer over everything that we've talked about on the NASDAQ market, which is QQQ, to the SPY, and that's going to basically reflect the same thing. So that's just a quick rundown on the charts. Let's go ahead and jump into some of the key economic data that's going to be released. Today, we didn't really have too much happening. Nothing worthy of paying attention to. Tomorrow, again, we don't have anything too crazy. We have the EIA short-term energy outlook that's going to be released. That's going to be important for those that are trading any energy stocks that are going to be affected by this information. We also have some Fed speakers speaking tomorrow, which is going to give a little bit of a guidance. So definitely something to pay attention to, but it's not very crucial. I don't think it's going to be moving the market as nearly as much as Wednesday and Friday or Wednesday and Thursday, right? Wednesday, we have the core CPI report month over month for the month of April, core CPI year over year for the month of April, just the CPI year over year for the month of April, and just the CPI month over month for the month of April, right? We also have crude oil inventories being released. We have crushing crude oil inventories or Cushing crude oil inventories being released as well. That's going to be the big things to pay attention to on Wednesday. We obviously have a couple more, Fed speakers speaking throughout the week to pay attention to. Thursday, pretty big day. We have OPEC monthly report being released, continuous jobless claims, and jobless claims just in general, initial jobless claims. We have core PPI month over month for the month of April, core PPI year over year for the month of April, and then we have just the PPI for the month over month for the month of April. So if you guys don't know what CPI and PPI stand for, CPI is the consumer price index, which in essence measures the inflation from the consumer side. PPI is producer's price index, which measures inflation from the producer side. And so those are why those two are really big on paying attention to those, because those are, obviously giving guidance, not just to the market, but to everybody else, to the Fed, to us, as to how inflation is doing, right? And one thing I did want to reflect on is, obviously the Fed got a lot of information leading up to last week, right? And they still decided to raise rates, which means that they're not confident that the overall market and the overall economy and the inflation is doing good, right? It's not as on track as they was expecting it to be. So that's kind of why they raised rates again, in light of banks failing, right? In light of the economy not doing too well, and in light of the market the way it is right now, and how it's been choppy, right? And they still decided to raise rates. So that should give you, I'm not saying to draw conclusions, but that should give you something to, being preparing for, in expectation for how the core PPI and core CPI and just the CPI and just the PPI reports are going to come out. So like I said, prepare. That's why we're going over these key levels, because depending on how those numbers come out, that's how the market's going to be reacting. Friday, we don't have too much. We just have a bunch of Fed speakers speaking. And I think there's going to be a lot of reflection on how CPI and PPI came in. So that's pretty much it with key economic data that's going to be released this week. Again, give you guys a quick recap of some of the levels that we're going to be paying attention to in terms of QQQ. To the upside, the level is going to be 336, 337. That's going to be that zone that we're going to be paying attention to if CPI comes in lower than what's expected, right? So if inflation is doing better, we're going to probably see a run up in price action. If it comes in hotter than expected, which means it's going to be higher than what was expected or equal to, we might see more consolidation, or we might see another push down to the downside. So if it comes in lower, we're seeing a run up to here. If it sees, either as expected or hotter than expected, our first level to the downside is going to be 313. And if it's really bad and we just have a whole bunch of things piling up, PPI comes out bad, CPI comes out bad, then we can potentially expect a break through this resistance zone or through the support zone and a push even lower. But this is going to be generally that zone that I'm going to be paying attention to. I think that, in my opinion, from what I'm seeing, I do anticipate that CPI and PPI might come in as expected or hotter, slightly hotter than expected. And we will probably see a push down to this zone. Again, this is not financial advice. This is just my kind of prediction, I guess you could say. But it's very possible that we do come in lower than expected and see a push up to this first level of resistance here at 336, 337. So be prepared for both scenarios. Our strategy is going to be waiting for that report to be released and see how that's released. And like I said, I kind of gave you a rundown as to what I would do if the market starts selling off, what I'm going to be trading, or if the market starts running up, what I'll be trading. So hopefully this is helpful for you guys. If you guys aren't subscribed, we do these videos every single Monday. And if you guys found value, make sure to smash that like button, subscribe to the channel, share it with a friend. It not only helps the channel, but it also helps get the information out to more traders and more investors so that they can be more informed when they're going to be making trading decisions instead of just kind of flipping a coin and hoping for the best. So I'll see you guys next week, and happy trading.